Ladies and gentlemen, welcome to another edition of In the Pit with your host, Lobo Tiggre. Our victim of the day is Rick Van Nieuwenhuyse. He is the CEO of Contango Ore. I've run into Rick before from his Novagold days, and of course, many of us have heard about Trilogy. So there's a lot of history here, and he's got a new company he's going to tell us about. Why don't you give us the 30,000-foot overview, Rick? And then I've got questions, of course.
You bet, Lobo. So Contango Ore discovered a 1.3 million ounce gold deposit in Alaska, averaging about 44 grams per ton and right off the Alaska highway on land owned by the Tetlin tribe, one of the Alaska native tribes. And this is their private land. And this was about 10 years ago and started a process of looking at a partner to develop the project, entered into a 60-40 joint venture with Royal Gold owning a 40% interest, which frankly, after they earned their 40% interest, kind of high-centered the project. It wasn't really moving forward. Royal Gold is a royalty company. They're not really supposed to be operators. So I I joined the company in the beginning of 2020 to work with both the Royal Gold side and Contango side. The original idea was to consolidate 100% and then, advance the project, which was sort of at the PEA level, pre-feasibility level of study. Instead, what happened is I ended up doing a deal with Kinross, bringing Kinross into the fold, compelling Royal Gold to sell their 40% interest to Kinross, take a royalty, and us selling half of our interest, which was 60, so now we're 30, giving Kinross the 70% interest, lion's share, operator management. The whole point here and the whole purpose of doing that was to be able to truck our ore, which is very good grade, up to the Fort Knox mill, and thereby foregoing huge amount of capital to build a mill, a huge amount of effort and through permitting process and building a mill and a tailings facility. Those are all tough things to do and take a long time and are fraught with a lot of risk, both capital risk and just execution risk. This seemed like a very straightforward, simple plan. We wouldn't be building much on site, which also went over well with the Tetlin tribe. We're basically building a truck shop and some admin buildings and ditching to construction, just sort of that you'd normally have at an open pit mine, but no mill, no tailings facility. Fort Knox has been operating for 25 years, so this already kind of just made sense as a business plan. So that's what we have. It's pretty unique, and we're a U.S. listed company only. We're not a Canadian junior, if you will, and we're listed on the NYSE American. So it's a little bit of a different story. We only have 6.75 million shares outstanding, and that's not because we've rolled them back 100 to 1 or something like that. It's just we've been very prudent with our share issuance.
All right. So I guess I get it. I understand this idea. Well, it's easier, it's faster. You don't have to go after these hard to get permits. It's just a pit, and hopefully that will be easy. And if you have you're working on behalf of a First Nations tribe. If you have them on board, that permitting should be easy or relatively easy. But it kind of disappears into Kinross in a way. You get a carried interest that may pay in 2 years. I looked over your presentation. I didn't see a discounted cash flow model. There's nothing like an NPV or an IRR for somebody else's project, which is done internally. How do we put a valuation on this? I mean, you guys are getting a pretty rich valuation, and given the pluses to the story, I can see why. But how do I know that number is reasonable? Or if I'm going to buy the stock now, how do I know your stock's going to go up and not just backfill to that level?
No,
help me out here, Rick.
Yeah, all good questions, and I think you have to. We don't have a feasibility study on the current envisioned project yet, because that's what we're working on. So there's a feasibility study in process, and I use the royal we here. Obviously, Kinross is the manager and operator and doing all the heavy lifting, which is nice because it leaves me to do other stuff. But we'll get to that later, maybe. So the feasibility study's on track. Should be done later this year. We do have Kinross's guidance that they put out when they made their acquisition. And in terms, I mean, there's a couple of ways to address this. First of all, I want to say that they paid $93 million for this asset. So, they've got skin in the game. And this will double, and this is their guidance, this basically doubles the production out of the mill side of Fort Knox. Fort Knox has a heap leach and a mill. This will double the production of, a little over 200,000 ounces annually of the Fort Knox mill. So that mill will be producing, 400 to 450,000 ounces of gold a year. So that's pretty significant for Kinross. It's a tier 1 asset. It's in North America. That's what Kinross's shareholders have been telling Kinross that they want more of, hence the acquisition of Great Bear. So, they're solidly moving this project forward. It's not one of these things that might happen. We don't have a carried interest. We participate. So we write it when there's a $25 million budget for this year, we participate. Our share is going to be, $7.5 million bucks. So, we've got cash from the transaction. So, we're in pretty decent shape. The other thing I'll point out is, so we've got Kinross guidance that they put out, they updated in July of last year, basically guiding on capital, 130 million, basically guiding on cash costs at $750 per gold equivalent ounce. This is mostly gold. There's a little bit of silver, but mostly gold deposit. And they said we're going to be producing 220,000 ounces on average for 5 years. So, you do the math, and that's 66,000 ounces of production for us. And if you choose a $1,750 long-term gold price, just to do some simple math, it's $1,000 margin. 6.75 million shares outstanding. That's over $60 million of free cash flow a year. So the fact that it's somebody else like Kinross is operating it should give every investor comfort that it's doing it well and it's doing it right. The fact that the Tetlin tribe is involved as an owner and a royalty owner should give every confidence to investors that this project isn't going to get held up in the permitting process. We're only disturbing 5.2 acres of wetlands. We only need one federal permit, a wetlands permit, which pretty much do anything up in Alaska, you need a wetlands permit. But it's only 5.2 acres and it's on private land, and it's to upgrade the road that goes into the Tetlin village. So obviously you've got Tetlin support to do that so they can drive the road year round rather than not being able to drive it in the springtime when the snow melts or in the wintertime when it glaciates. So it really is a simple project, but yeah, and it's going to take time. We'll get the feasibility study out and everybody can do their own, put their own spreadsheet together and put the cash flows together and choose their favorite gold price. I always sort of warn or caution investors that, look, inflation's real. I mean, even the Fed's admitted that now. CPI was, 7.5% for January. Hidden in those numbers was, if you're constructing something, you're looking at things more like 18%. So I fully expect the $130 million capital number to go up, and I also expect the $750 all-in sustaining cost to go up. A big part of our cost is transportation, so diesel fuel. When that guidance was done, I think they used $65 a barrel oil. Oil's $90, and I don't know if it's going to be 90, 100, 120, depends on all stuff that we have no control over. What I do believe is that if the oil price is $120 a barrel, gold will go up. Or gold will go up and oil will then be $120 a barrel. I'm not sure which way it works, but we are actively seeing the gold price move right now. It's gone up, $100 in a month. So I think, plus or minus, we maintain that $1,000 margin. I think that's as an investor, that's how I look at it. And I put real money into this. I don't have founder shares and all that, but so that's how I kind of, to me, this is a cash flow story.
All right.
So we know a lot.
That makes sense, because if we, sorry, let me jump in because there's several things I want to follow up on.
Sure.
If we look, they pay $93 million for 70% of something. You've got $160 million market cap. Last time I saw, how's your 30% worth so much more than what they paid for 70%? I get it. And we'll have a feasibility study that will answer these questions for us. So that's good. But that also struck me as a bit interesting. And I guess you can say, well, they're Kinross, they know what they're doing, but they're also talking about going ahead and starting this summer as well, before the feasibility study is done. So I'm wondering, well, one, isn't that putting the cart before the horse? You can say, oh, well, they're operators, they know what they were doing, but that has gone awry before. And the other thing is we don't still have the final permits in place. So how can they be that aggressive with their timeline without that permit? And I get all the advantages that you just described, I understand, but still, you spit on the ground and that becomes a wetland, and who knows what happens then with the Army Corps of Engineers.
Yeah, so I mean, and the program this summer is a very modest program. I mean, what we're definitely going to get done is the camp, the construction camp, which will then double as the operating camp. And it's really simple. We bought a hotel in Tok. It was a hotel that I think Princess Cruises ran for years. They used to bring people up to Haines and then bus them up the highway, and it was a nice place to stop, and had a bunch of Alaskanus, that kind of things going on. They gave that up a few years ago, and this hotel is basically sat empty. So we looked at it and said, boy, that looks like a great place to have a camp. It's right outside of Tok. It's not like in Tok. Tok's about 1,500 people in the town of Tok. So it's that kind of approach. Again, we're not in the middle of nowhere, Alaska. We're right off the highway. Literally, you can see the hills right from the highway. So that's one of the construction jobs we'll do, and we'll probably just fix up some of the roads, and maybe if we've got time and equipment's available, the mine access road that goes from the Tetlin Road up to the mine site. It's a drill road, so you can get up there with a 4-wheel drive pickup, but you can't drive a haul truck down it. So those are all things that you can do. It's all in the uplands. It's all in private land. So there's a minimal amount of effort that you need to do to, work up in the uplands. The wetlands work for the lion's share of it is down on the Tetlin Road. And that's why I say it's only 5.2 acres of wetlands disturbance. The lion's share of that is right along the Tetlin Road. So, and that won't happen this summer at all. That's after you get permits to do that.
Okay, so that brings me to another question, is sort of the time frame, and two, the holding company discount. So even if all goes swimmingly well, they're talking about production in 2024. That's 2 years from now. Why should anybody buy your stock now? Why not wait until it's closer to that cash flow? I mean, you're going into the boring engineering phase.
Certainly the project is. We're trading still at a very, very significant discount to our projected cash flow, based on those numbers. And if you like the $1,000 easy math margin, obviously we're doing other things, and that's the beauty of having Kinross be the manager and operator, and having them, sort of all in on the project. I have very little that I need to be doing. We have, quarterly update meetings. We have a technical ad hoc sort of technical committee that, they let us know what's going on. We have a good working relationship with Kinross. We help out where we can on the permitting, just because we know a lot of folks up here, and so it's it's more, that permitting process is a bit of a hearts and minds. There's a hearts and minds effort behind it as well. Get all your support out there to write letters, those sorts of things. But separate from that, we have our Lucky Shot project, and we have several other early stage exploration projects. I think people who know my background and track record, we know how to operate in Alaska. We've been very, very successful up here. I grew up in Alaska. I live in Fairbanks. My ears to the ground. I hear all the new stuff that's going on. And on Lucky Shot, just to pick on what I think is our sort of second best asset in the portfolio right now, and second most advanced.
I was going to ask.
Yeah, it's a high grade quartz vein. It was operated at the 1920s to 1942. Produced 250,000 ounces of gold at 40 grams per ton. And it's 1 to 5 meter wide shear zone with quartz veins and free gold, low sulfide, mesothermal style veins. In 1942, the government issued the War Act, which shut down all non-essential mining, which meant gold mining. There might have been more to that act than just related to the war effort. I think it was also to control the gold price. But anyways, that was the last time that mine produced any gold, and it was 40 grams per ton, 250,000 ounces. So we're basically going underground. There was a tunnel was put in the 80s to access the mine and never quite got there. It ran out of money, it changed their mind. But we get to take advantage of that. And we'll go underground, extend, we have to refurbish, it's about a 1,500 foot adit existing. And we need to go to about 2,200 feet. So we'll refurbish the existing part of the adit, we'll add another 700 feet, drift parallel to the adit underground, and then just drill the hell out of it. From underground, you're drilling, a few hundred foot holes rather than from the surface, you'd be drilling a couple thousand foot holes. So this is, the make sense way to approach this. We'll take big samples. It's coarse-free gold, so you have all the sampling issues, and you want to have as big a sample as you can get. Step two, we'll go into the hanging wall and we'll cross-cut the vein, and we can take some bulk samples and we can test mine the vein, and we can learn a lot about once you're underground. Trying to figure all that out from surface is pretty tough. So this is it's a nice second project for us. I hired Chris Kennedy, who is the former mine manager of the Pogo mine. He was there for 8 years when Sumitomo owned it. Sumitomo owned it, or sold it to Northern Star. Chris stayed on as an advisor for a year, sort of on loan to Northern Star. Went back to work for Sumitomo in 2020, and literally got bored doing exactly what we're doing on our Zoom screens here. And I was able to lure Chris away and get him back underground at Lucky Shot. So we've got a first-class mine operator who understands how to mine safely, and knows all the regulatory folks in the state, and has a very, very good reputation. So I'm excited. I think we've got work to do this winter. The mine crew is up there. Atkinson is our mine contractor. They're there now and refurbishing the underground, and they'll start on the new extending the new part of the tunnel probably in a month or so, and then drifting. And by July, we should be in a place to start drilling. And
I begin to hear the answer to my next question there, but correct me if memory serves. This is the same Lucky Shot that Full Metal Minerals broke their pick on with Rob McLeod, and then somebody before them had it. And I remember this. If I have the right mind, I remember this, and it was always so exciting. High grade drill results. Every time somebody pokes a hole at that thing, they get high grade gold in there, but often very narrow, hard to build tonnage. And the last resource estimate was, nice grades, but pretty modest in size. It doesn't pass the go big or go home test. So I was going to ask, what are you doing different? I already hear it in your answer. You're going to drill it from underground, up close and personal. But tell us a little bit more. How can you be so confident that this time you guys can make a go of this when good people have tried before and broke their pick there?
Well, and no, not to pick on Full Metals, but just what they did is they had a helicopter-supported drill program and drilled the Coleman part of the vein, which is it's actually the same vein. It's just offset across the fault, and it's literally on a different claim, so they call it the Coleman. So they drilled up top 175 or 6 holes. Very very challenging drill holes to drill. I mean, these drill pads were epic construction sites. I mean, this mountain's like boom. It's a steep it's a half-day hike up to the Coleman from the road. Now, when I look at that, I go, why the hell would you drill that with a drill rig when you've got a tunnel right down here, and you can do what we're going to do, which gets around it's a lot less expensive and more productive to drill from underground. You can take a big sample. You can drill H. You can drill P if you want to. You can tunnel another few hundred feet and get into the vein and test mine it and bulk sample it. Those are all the things you need to do with a coarse gold deposit. Drilling N or B core by the time you get down to the vein is next to a useless sample. So we know the vein's there, and I thank them for all the drilling efforts, the 176 holes that say the vein is there. And I don't know about their 120,000 ounce resource. It's what we call it, a historic resource. It was 43-101 compliant and all that when it was done. That was kind of the 2005, 2009 time period. I don't recall anybody doing any significant work before Full Metal. A number of companies sort of swapped shares and stuff after that, but nothing really happened. Yeah, I mean, and again, we're pretty serious about what we want to do. Again, I sort of point to Chris Kennedy's. He's worked underground at Pogo for 8 years as the mine manager. He knows a thing or two about what a quartz vein looks like, and he's pretty damned excited. So, and I'm an exploration geologist with a pretty solid, successful track record. I'm not here to waste my money. I put my money in at $21, so I don't have founder shares and a big pile of options.
Well, since you bring that up, I always try to close on the skin in the game question, but we've jumped the gun a little bit here. So no founder shares. If you want us as prospective shareholders to put our hard-earned cash into it, how much of your own cash have you put into this story?
Yeah, so when I joined the company, I insisted on doing a sort of a mini financing, if you will. We needed money anyways, just to kind of tell the story. So I put in, I think it was about $500,000 then, and then and that was at 13.25, I think. And then I put $1 million in at 21. And I'll tell you, when next time we finance, I don't know when that's going to be exactly, but it'll be sometime this year probably. I'll put more money in then. I believe in what we're doing. I think we've got, we only have 6.7 million shares outstanding. So, when people get behind this story, the stock's going to move. It's 10%, or sorry, 10 times as liquid on trading on the NYSE as it was OTC. But we still only trade thousands of shares a day rather than hundreds.
I was going to ask, is that tight share structure the result of a consolidation?
No, we've just been very, very prudent. And again, I'll use the royal we, because this happened before I joined. It basically has been a friends and family finance company, and it was spun out of an oil and gas company. And that's originally why the Contango oil and gas folks went up to talk to the Tetlin tribe, actually at the invitation of the Tetlin tribe, to look at their land. And there's a big parcel of land. It's 675,000 acres. So it's a little smaller than Rhode Island. And they went up to look for oil and gas, high-grade metamorphic rocks. The geologist said, no chance for gas here. But they developed a good relationship with the tribe, and they said, well, let's go look for minerals. This will be fun. And that's how Contango Ore was spun out of the company. And they financed it themselves, friends and family, and their friends happen to be a bunch of rich Texas oil people that think this is kind of a fun thing to do.
All right. Okay.
And
so
really good shareholders.
We've got the peak JV going forward there. Hopefully in 2 years, lots of cash flow. Happy, joy, joy. Meantime, we've got Lucky Shot. Hopefully you'll do it right, not like those other guys. I'm going to invite you to wave your arms here a bit. What's the corporate goal? What's the dream that you have? If you succeed at Lucky Shot, what does that look like?
I think we can outline 500,000 to 1 million ounces of gold there, and probably something in the 15 to 20 gram per ton range. I think that's realistic. That is actually with the 176 holes that they drilled from the top of the mountain on the Coleman portion of the vein. That was they got 18.3 grams per ton, I think it was. So that's a good underground mining grade. And we can look at new technologies like ore sorting to maybe upgrade and get rid of the granodiorite hosted quartz vein. Maybe you can separate some of the granodiorite, the unmineralized rock, from the mineralized, things to look at there. But that's a realistic ore body, and for us that would essentially double put a mine plan around something in the 500,000 to 1 million ounce range. We could double our production profile, which is, and for not a lot of money. It's coarse gold. Historically, they recovered some, 80% was the number they quote. I don't know if that's how accurate that is, but it's coarse-free gold, so it's not hard to gravity recover. So, those are all things that, and if you don't use cyanide, you don't have a tailings facility, you just simplify your life from a permitting standpoint. And I've been involved with, big projects, Donlin. I mean, that was 25 years ago we found Donlin, still not permitted. So, I've gotten older and wiser, I guess. I'm sticking to the roads. All of our claim blocks are right around the road system in Alaska. We've got our Shamrock, our Triple Z, and Eagle Hona projects. We're looking at other opportunities. I know of other opportunities in the state that I think would sort of fit our talents. And, we're either going to grow this company or, Kinross wanted to have 100% of this when we first were talking. I think, it was in early 2020. And then, the COVID year just kind of screwed everything up, frankly. I mean, they wanted to use shares. They wanted to buy us for shares, and their shares were going all wonky. They could be up, up and down, and a huge amount of volatility. And then people want to protect the downside and limit the upside. And it's like, well, why the hell would we do that? So we ended up at the 70-30 that we have, and I think it's a good deal for our shareholders because, if you were building a mine and a mill and a facility a tailings facility at Manh Choh today, I don't know, the capital would be $600-700 million, maybe more. And with the inflation hitting here, not that we're not subject to inflation, but inflating $130 million number is a lot different than inflating a $700 million number. So, right? I mean, we just don't have
no disrespect, but everybody who remembers the inflation of the Galore Creek, ultimately that ended up getting, and sorry, not to poke you in the eye there, but that was a black eye for Novagold. That the inflation of the budget on that project was so astronomical that the major partner ended up pulling the plug on it. So,
there were certainly a lot of reasons why Teck pulled the plug. I mean, they had lots of issues with inflation related to their tar sands project and to their coal projects. I mean, the problem I think we had at Galore Creek was you had this copper move from when we acquired Galore Creek, the copper price was 65 cents. When Teck agreed to participate as our partner and put $600 million into the project, the copper price was north of $4. But nobody believed it. Everybody expected it to go back to $1. That was the part of the cycle that we were in at that time. So when you say, capital increased, sure it did. AMEC is the one who did the capital estimate review for Teck when they made their investment, and a year later, suddenly it's doubled. I think the problem in DC at that time is you had the Olympics, you had all their tar sand stuff going on, so you really had a lot of competition for contractors, and that's what happens. If you'd built Galore Creek at a 350 average 350 gold copper price, and what gold price, $1,200 gold or $1,500 gold, pick a number, you'd have made a shit ton of money, right?
It's a technical description.
A lot of money. And I think that's just, your timing is everything in this business. And what I know now about our project at Manh Choh, with Kinross guiding in last July at $130 million, and we've got 20% construction inflation, and we're a year away from construction, 2023. I mean, put 20-30% on that number, and it's going to grow, but it's not like you're going to grow a $2 billion project to a $4 billion project, right?
Yeah, I get that.
Galore is a real project, and Teck and Newmont are now spending a fair bit of money on advancing it. So it's a real project. It'll be a mine.
Oh, the asset isn't the question. I guess that, if I'm going to be rude, the question is, if I was a Novagold shareholder who got hurt on that one, and if I was a Trilogy shareholder who's still waiting for that road to be permitted, and now, here we have a not quite permitted, new project, I might say, Rick, show me, don't tell me. I might say that, but I guess we'll just, that's unanswerable. What are you going to do? We'll have to see.
Look, the mining
industry
is not an easy business. The Ambler district is a prize worth the effort. It's a whole district. Arctic is one of the largest VMS deposits in the world. It's probably one of the largest that's open pitable. So those are projects that are worth doing, and we've always gotten involved with projects that are worth doing. We're good explorers. Yeah, these are complicated projects. Permitting a road, we did get the road permitted. It is permitted, so it's not permitted. It's obviously, you've got to, in the United States, you have the post-permitting period, which is called lawsuits. But you've got native groups that support the project. You have NGOs who don't. We have the Biden administration. I think we'll work our way through these things. Solid state support. The state of Alaska is a great place to work. We've got great zinc mines and great silver mines and great gold mines. So yeah, I'm a believer in the state. I'm a believer in the infrastructure, and using the infrastructure that we have and the tools that they. So I'm still a big shareholder of Trilogy, so I'm still all in there.
Okay, well, let's not beat that to death. Before we wrap up, let's go back to Lucky Shot for a bit.
Yeah.
What are the deliverables here? What's the budget? How soon do you get to that drilling? When we'll be able to get an answer that isn't just arm waving?
Sure. $10 million budget. It's an 18-month budget. We should start drilling in July of this year. And obviously, once we're underground, we can just keep drilling. So we can, if we're hitting the kind of intersections that we want to hit, and we're looking like and the assaying is going to be an issue. It's always an issue right now. How long it takes to get assays. We're going to be looking at some new technology that's being applied called a photon assay. If we can get that done more quickly and more effectively, that's probably what we'll end up doing. Yeah, so there's your answer. So by July we should start drilling, and hopefully 3-4 months later we've got drill results. If we like what we see, we can infill drill, and we can extend the adit and go test mine the vein. It's only going to be a couple hundred meters in front of us. So
all right, and you're fully funded for that while keeping up with your commitments with Kinross at the same time?
We are, but we will have to do a financing at some point in the future here. No question about that. We followed S3, so we have a shelf prospectus filed, and so we can kind of pull the trigger whenever we think the right timing is. So yeah, and no question, we'll be looking at additional equity financing to fulfill our obligations at Manh Choh. And we'll see what the feasibility says, see what the capital requirement is, what our 30% is, and my guess it'll be some combination of equity and debt to get that final piece in, whether that's 40 million or 50 million or whatever it is.
Well, if you're going to be drilling in July, would you likely wait to get those first exciting drill results first, or go ahead and finance when the money comes knocking on the door?
Well, we'll be opportunistic about financing, and one of my objectives the board wants me to do this year is to really improve our liquidity. As I said, we kind of used to trade hundreds of shares a day. Now we trade thousands, but we really need to be trading 100,000. So that's my objective over time. You don't get there right away. It's not going to happen overnight. But the NYC platform is certainly a much better platform to get trading on, and we've got a good market maker there, one that I've worked with before at Novagold and Trilogy. So and also with Alexco. So I'm excited. I think this is going to be a very transformative year for us, and I think we'll have a good year in gold. I think
that won't hurt.
That'll help, obviously.
Very good. Okay, well, I get it. I understand what we should be looking forward to. So please keep us posted on how you do it, and very best of luck with it.
Well, appreciate it, and thanks for having me on the program, and best of luck to you and the rest of the year. Take care.
Thank you. Thank you for watching this edition of In the Pit with Lobo Tiggre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.